Joining me now on Markets Atlantis, Ajay Tyagi, the EVP and Fund Manager of Equities at UTI Mutual Fund. Hi Ajay, good afternoon. Thanks for joining us this New Year's Eve. I think 2018 has demonstrated that Indian markets cannot and should not rely on FIIs. It's been a market dominated by DIIs. I didn't think we would ever be talking about this in 2017, but I think that's the biggest lesson of 2018. How bullish or bearish are you going into the new year?
Yeah, so you see, am I audible to you?
Yes, you're on live television. My question to you is, how bullish or bearish are you going into the new year?
So you see, we obviously have a big event in the first half of the year, which would have its own impact in terms of the sentiments related to which party wins, and markets always cheer continuity, and therefore to that extent I guess the return of NDA would be cheered by the market, whereas NDA not making it, not being able to form the government would obviously be given a thumbs down. Outside of that, but however, continuing on that, I feel that these would be short-lived reactions, maybe lasting for a quarter or a little more than that. However, in the fullness of time, what would drive the markets forward in 2019 would be the much-awaited earnings growth. And we have been talking about that at least for the last couple of years. There have been events in the last couple of years which have been kind of disruptive for short-term earnings growth, whether it is GST, demonetization. We can argue about their long-term impact on the economy, but they did lead to a pushback of earnings revival. I guess 2019, all of us would be waiting for better evidence of earnings revival, and I think that's the factor which can drive the markets forward. Outside of, like I said, the short-term sentimental impact on account of election outcomes.
Okay, now Ajay, we had Puranju Velayat earlier on the show, and the reason I'm bringing that up is that he believes 2019 is going to be the year of mid-caps, small caps. Are you on the same page as that, or do you think the broader universe is something to maybe be very cautious of going into a year of volatility, a lot of uncertainty with the election results, or what the FOMC is likely to do?
Well, let's put things into context before we comment on whether 2019 would be attractive for mid caps or not. The first thing is that starting of 2018 was a period when mid caps were trading at about 40% premium to large caps, and we are using the mid cap benchmark vis-a-vis the large cap benchmark, and you can choose Nifty as the large cap benchmark. Over the last 15 years, mid caps have traded at a slight discount to large caps, and I would say rightfully so. During periods of huge mid cap rallies, the mid cap index trades at 20-30% kind of premium to large caps, but January 2018, which in some sense was the peak of the mid caps, it went as high as 40%. Now what's happened in the last 12 months is that this premium has gone off. It's now come back to its normative range, and mid caps today are trading almost at their long-term averages vis-a-vis large caps, let's say Nifty. So difficult for me to comment, or rather at least the data in front of me doesn't suggest that mid caps have been beaten down so much that 2019 could be a great year for them. They're just at their long-term parity. In fact, I would say that we should be more bottom-up in our thought process. There could be large caps which can offer great opportunities in 2009, just as equally there could be mid or small caps which can offer great opportunities. We would still want to be more bottom-up in our approach in terms of stock selection in 2019.
Okay. You talked about earnings momentum perhaps being one of the biggest triggers. But Ajay, if you look at 2018, some of the comeback that we saw in the earnings was discounted by the markets. It was ignored. Why do you think that's going to change in 2019?
So, that's a good question. In fact, there is an early evidence of earnings revival. The last 2-3 quarters have definitely shown some green shoot in terms of revival, but the market wants more and more evidence. Now, just when the market was waiting for more evidence, we had these issues of crude boiling all the way to $85, currency depreciating by more than 10%. Trade was actually aggravating the situation and so on. So global markets, including both developed markets as well as emerging markets, in the last 2-3 months have been in a bit of a turmoil and therefore have been rendered hugely volatile. While this settles down on its own, and I don't know when, but the fact is that markets would again go back to look at evidence from the more fundamental factors, which in our case would be earnings revival. So I don't think that this whole earnings revival, which is slowly happening, would be totally ignored in 2019. The last 2-3 months have been bit of the global geopolitics as well as the global macroeconomics spilling over into emerging markets, including India.
Okay, Ajay, unfortunately we're running out of time, so I'm going to thank you for joining us this New Year's Eve. Good to know we're not the only ones working. Here's wishing you and everyone at UTI Mutual Fund a very happy and prosperous New Year.